Zoom exceeded earnings expectations, yet the stock dropped. Investors might be concerned about future growth slowing after pandemic-fueled gains. Uncertainty about sustained demand weighs heavily. Despite exceeding earnings projections, Zoom's stock price fell. Market sentiment might be negative, reflecting broader economic anxieties impacting tech stocks. Zoom's strong earnings report couldn't offset broader market anxieties. Investors might be selling off tech stocks, regardless of individual company performance. While Zoom beat earnings, a cautious outlook from management may have spooked investors, triggering sell-offs. Future growth concerns prevail. Although Zoom surpassed earnings estimates, a lack of significant new product announcements contributed to the stock's decline. Zoom's impressive earnings were overshadowed by concerns about increased competition and the return to in-person work. Even with exceeding earnings forecasts, Zoom shares dropped. Profit margins might be shrinking, prompting investor apprehension. Superior earnings didn't prevent a stock price decrease for Zoom. Investors may be taking profits after a period of significant growth. Zoom beat projections, but the market reacted negatively. This reflects a broader tech sell-off, unrelated to company performance. Exceeding earnings estimates didn't stop Zoom's stock from falling. Investor expectations were likely higher than the actual results. Despite strong earnings, Zoom's stock price decreased. This could reflect a shift in investor sentiment towards the tech sector. Zoom outperformed earnings predictions, but the market remains uncertain about long-term growth potential. Risk aversion plays a role. While Zoom delivered better-than-expected earnings, a general market downturn negatively impacted its stock price. Strong earnings weren't enough, Zoom's stock dipped. Fear of rising interest rates likely played a part in the drop. Zoom's better-than-expected earnings failed to impress investors. Concerns about the sustainability of growth are paramount. Exceeding earnings forecasts didn't halt Zoom's stock decline. A bearish market outlook might be influencing investor decisions. Zoom's strong earnings report was overshadowed by broader macroeconomic factors impacting the tech sector. Despite beating earnings, Zoom's stock fell. Potential for future revenue decline might be causing investor hesitation. Although Zoom surpassed expectations, investor sentiment remains negative, driving down the stock price. Zoom exceeded earnings, but the stock price dropped. This could reflect profit-taking after a recent rally. While Zoom beat earnings, a lack of compelling guidance might explain the stock price decline. Zoom outperformed, however, its stock price fell. This reflects potential overvaluation concerns. Zoom's earnings beat predictions, nevertheless, the stock is down. Increased competition is a likely factor. Despite excellent earnings, Zoom's stock price declined. Investors might be anticipating slower growth ahead.